Hello everyone and welcome to Market Week in Review for the week ending March 28th, 2025. My name is Bei-Chen Lin. I'm a senior investment strategist and head of Canadian strategy here at Russell Investments. On this week's Market Week in Review, we have three topics to discuss. First, the ongoing tariff situation and what investors should know. Second, some key watch points for the upcoming US and Canadian labor market reports. And finally, what investors should know about the upcoming Q1 2025 US earnings season. So first, let's begin our discussion by talking about tariffs. And I know that tariffs are a subject we've talked about before at length, but this week we did get some additional announcements. At the start of this week, there were some hints that perhaps the reciprocal tariffs that were originally scheduled to go into effect on April 2nd next week might be somewhat less than what people had originally been thinking. And as a result of some of that positive speculation, we saw the S&P 500 rally significantly on Monday. But by the middle of this week, we saw a bit of a shift in investor mindset. That came as a result of some additional announcements from the US government that they were going to go ahead with the imposition of tariffs on automobiles and automobile parts as of April 2nd. Now, originally, investors had been thinking that perhaps there might be a delay in the imposition of automobile tariffs until after the reciprocal tariffs take place, but now it looks like both sets of tariffs might be scheduled to take place on the same day. Now, I do want to caution that the situation still remains very dynamic, very fluid, and things could continue to change right up to the last minute. And there's certainly a lot of unanswered questions on investors' minds. For example, on April 2nd, when the reciprocal tariffs go into effect, which countries are going to be impacted? Is it only a subset of the countries, or is it going to be more broad-based across many different countries? What are the tariff rates going to be like? Is it going to be low or is it going to be high? Is there going to be room for countries to negotiate? Are we potentially going to see some tariff deals where some of those tariffs ultimately get reduced? Or conversely, do we see a further escalation of tariffs with other countries imposing retaliatory tariffs on the US? The magnitude ultimately of the final tariff rate that gets applied, as well as what countries and what types of products these tariffs apply to, can impact the magnitude of the impact onto the US economy. Our base case for now remains that we think the US economy should be able to avoid recession, but we do continue to also think that recession risks are somewhat above average still. Next, I want to discuss the upcoming US and Canadian labor market reports. We're going to get one for each country next week, and there's a few important things to look at. One is, of course, the unemployment rate. In particular, I'm very much focused on the unemployment rate for Canada because we know that the Canadian job market has been less robust than the US. And additionally, we've seen that Canadian small business confidence has been much lower than US small business confidence. We saw a big drop-off in small business confidence in the month of March in Canada as a result of tariff anxiety. Remember, we've been thinking that the tariffs, if they were to exist for a protracted amount of time, could impact Canada more than the US. And so we're going to be carefully watching to see how much of that business anxiety might have gotten translated into overall job creation and the overall unemployment rate. I think if the unemployment rate in Canada were to continue to go up, then it would bolster the case for the Bank of Canada to cut rates again in April, even though we might see some upward price pressures from retaliatory tariffs. On the US side of the equation, I'm also going to be looking at the overall unemployment rate. In the US, the unemployment rate has been relatively lower compared to the unemployment rate in Canada. I'm also going to be looking at the composition of job creation and the composition of where we might be seeing job gains or job losses, with a focus on the government sector. So far, we've been seeing that the layoffs in the government sector haven't really had a significant impact of the overall job creation data, but we're going to see if overall labor markets can still continue to remain resilient in the US. That's going to be a key watch point for us. Finally, with respect to the earnings season, For the upcoming Q1 earnings season, the industry consensus is now expecting around 7.5% year-over-year earnings growth. That is a bit of a step down compared to Q4, but I think it's also important to remember that sometimes companies can actually beat these earnings expectations. And indeed, that was the trend that we saw in the past several quarters where companies on average tended to beat the initial start of quarter estimates. So we're going to be carefully monitoring the overall earnings growth rate, see how broad-based it is, and then also looking at what the consumer-facing companies are saying about their plans to potentially adjust pricing as a result of some of these tariff announcements. How much of that will they absorb through their profit margins versus how much of that will they pass along to consumers? Thanks for tuning in, and we'll see you next time on Market Week in Review.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.